Hi, I'm Charlie Horner from SBC, and today I'm delighted to be joined by EveryMatrix CEO Ebbe Groes. We're live here from the EveryMatrix brand new office in London. Ebbe, thanks so much for having us, for inviting us, and yeah, thanks for taking the time to chat.
Good to see you again.
Yeah,
Hope you like the place.
Oh, it's brilliant.
I think so brilliant as well.
Absolutely fantastic.
Yeah.
Yeah. Just to start off then, last year when we spoke, we did a lot of reminiscing about the story of EveryMatrix, the history. And one of those parts was the foundation of the company in London. Here we are again, back in London. It must be a big occasion for you.
Yeah.
You know, can you just tell me about that story and how happy you are to be back here in London with EveryMatrix?
First of all, Charlie, I don't know what is, every time we have some interview, we go back to reminiscing and being all nostalgic. Well, what's up with us? We have to look forward and not be these old geezers. But yeah, it is true. We started the company 2008 in Willow Street, around the corner from here where we are now. This beautiful building we're in, it didn't exist, of course. The office we had was a garage, an auto garage that had been converted into one of the more shabby offices you've ever seen. One open plan floor, where we could fit a few desks and the old table tennis table, and that was it. And that building is now completely gone, and in its place is a Nobu hotel, complete with 5-star dining and whatnot. So
Wow.
It goes to show how London and Shoreditch changed in the meantime. But yeah, it is coming back to roots, and it's also a spiritual center, not only for us, but I think for the entire industry, and to some extent a market that we really want to be in, both from company and performance point of view, but also from personal point of view. So I'm very happy that we're here.
Fantastic, and yeah, we can now begin to look forward and look at some of the
Yeah.
company's more recent achievements as well. First of all, what teams are going to be stationed in this office, and you know how will this facility help you to achieve your goals?
Yeah. To start off with, we have a commercial team here. So sales, account management towards UK, Ireland. Already now inherited a good portfolio of clients from our acquisition of FSB, and we're trying to build on that. So this is the first and maybe most important thing. The next thing is that we looked at the team once with the acquisition. We saw a lot of talent that was there, talent that we wanted to retain, talent that actually is very hard to get. And when I was presenting this case to my board and decision makers within the EveryMatrix company, we also highlighted this, the ability to take some really strong talent that live and breathe sports, because this was the ethos of FSB. They really were very strong in sports, and UK sports in particular, that we could take and inject into what we had here. It's not that easy to find. So particularly then it was sports division that benefited from this. Where people that really know sports inside out. The horse racing product that I've told you about earlier today, this is one part of it, but it's by far not the only one. We had a quants team with people sitting there and doing stats models for sports that we could add to our own, coming with their own views and their own experiences from this. We doubled our trading team, which for us is a really pretty big thing. And all of this, it adds extra gravitas, extra credibility, I would even say, to our sports product, which has been growing very nicely even before we did this. But I see this as something that will put us up there with the very best suppliers of B2B sports solutions in the whole world.
Mm-hmm. And the FSB acquisition has been a huge story over the last 12 months. Certainly the 9 months since it's happened. I was wondering if you could just tell us a little bit more about the horse racing product that you've built. And I know we spoke earlier, and it's been built over a 6-month period. Could you tell us a little bit more about that?
Yes, the first important decision to make was to say we would not, even though it was a strong product, take the FSB product and integrate into the existing EveryMatrix product. We could have done this we would probably have done it in 2 to 3 months rather than 6. The benefit of doing it in like the harder way is that we get everything aligned with how we doing things, so we are not having replicated ways of doing settlements. So we had to introduce a lot of horse racing specific things into risk management, into settlement, betting markets, etc. So that was the work we had. But I was also pretty confident that we could do it. We did a similar pivot during the pandemic, where we managed to bring on board esports in a pretty big way, a way that even today I can see in our P&L, in our reports from the sports, from the trading point of view, that all the efforts we did back during the pandemic actually today keeps paying off month after month, year after year. This is what I hope for here with the horse racing. We do it now in the early stage for necessity, in a way you could say. We have to do it in order to bring over the FSB client. But what it does do for us, it gives us this asset that allows us to go into pitching for deals that we couldn't do before, where we said, we will not pitch for this because that means we have to do horse racing, probably be 12 months or so on. We managed to do it in a shorter time, and by harnessing the experience and a rich culture as well that FSB had. And this I'm very happy for.
I just want to talk about company performance over the last sort of 12 months, and I know the Q1 25 figures have come out as we speak. So we've come off another record-breaking year for EveryMatrix. What's fueling this success, and what aspects of the business would you like to pay particular attention to?
Only one. That's the retention of clients.
Sure.
We didn't lose any clients in 24. We didn't lose any significant clients. Of course, we lost clients. But if we take our top 10 clients, then we didn't lose any last year, or year before, or the year before that either. So this retention is really the key thing. And we try to get clients from our competitors try to get clients from us. This is normal, this is acceptable. Contracts run out. So when the clients choose to stay with us, then that's a sign we're doing well. If it's an area where we have high churn, then that is a problem area for us. Doesn't matter if we have great marketing or great sales or great this or that, if we end up losing the clients. So this is what gave us the strong performance over the last few years. And as things look right now, I think 2025 will be the same. We'll retain the vast majority of our important clients. They'll be here when the year's over. And then with some efforts, then we'll be adding on top of this. And this hopefully is what should make 2025 an even better year than 2024.
Fantastic. And what do you think makes that retention rate so high? What is it about EveryMatrix that allows you to keep these clients on board for multiple years?
Yeah, it's certainly not that we're infallible. We make our fair share of mistakes. But we do try quite hard to put client needs at the center of what we do. We have, over the years, trimmed, iterated on a system that allows us to find when client needs are very important, and particularly for our very largest clients. We've tried quite hard to limit the inflow of smaller clients so that we would have more resources available for the large clients that actually matter. And this is a learning, of course, for any business. It's as much as the business you turn away as the one you get that determines the path of your future. So if we were to take too many smaller clients, then we would suffer from the large clients. And this we managed to do quite well.
So it's just about maintaining that focus on those big ticket clients.
Absolutely.
Yeah.
Yes.
And EveryMatrix in particular had a very successful year last year. I think EBITDA nearly doubled in that time. Where do you attribute that achievement to? And I guess aside from just the FSB acquisition, where's the organic growth coming from?
That's from trading. Sports is such a complex product. And when people look at evaluating our sports product against that of any of our competitors, you can look, do you have cash back, or do you have bet builder? Do you have bet builder in 15 sports or in 10 sports? You can do a lot of feature counting. What you also have to do is you have to look at the trading results. This is what shows if the quality of the odds is high, if your risk management is done well, and this is really a key thing that happens if you look at our results. And actually, it is in the numbers that we publish. You will see that the trading margins we have for Q1 are substantially higher than they were 1 and 2 years ago. So this means that the efforts we put into every little detail of the sportsbook and the quality of the odds and in the risk management, that these are paying off. And so but essentially what it means is that the GGR of our clients on the same turnover is increasing, which in turn means that we're making more money. So it's not that we signed immensely many more clients, have immensely more activity on the sportsbook. It is that this activity is today more profitable than it's ever been. We put a lot of focus on this. It's also why I was highlighting the part of taking this experienced trading team from FSB and their experienced quant team as well. We have today the vast majority of the trading that happens on EveryMatrix Sportsbook is on in-house odds models. It's not from third-party feeds or anything like this. These are odds that we create ourselves from a very qualified in-house team of statisticians with masters and PhDs and stats, really clever guys, and they have built something that really is very strong.
And what about elsewhere in the group? Is there any other sort of business units that you'd like to particularly shine a light on for sort of helping fuel growth over the last 12 months?
Yeah, there's one big area where we're investing right now. This is live dealer. This is one area where I believe we have to be pretty patient, but also one where the investment, the size of investment is also very high. It's very labor intensive. You have to have very good quality software, but you have to have very high quality presenters sitting in front of the camera as you and I are doing now, and not doing any errors when you draw the cards and flip and spin the roulette, and giving great experience to build this from scratch. As almost everything we do, we build the software from scratch. We spent 18, 24 months building this and then launching game after game. We have roulette live auto roulette, blackjack. This quarter, the big news from that division was to be the first dedicated blackjack tables was sold, which is one of the big money earners within live dealer, that you can sell dedicated tables to one operator, that they get exclusive access to these blackjack tables. So we're quite far away from being where we want to end up. But yeah, if you're asking, is there something to watch, then is it whether we will pull that off and become not a big competitor to Evolution and Pragmatic and Playtech and those guys, but I would say a credible participant in this, because entering this part of our industry, that has proven really hard, and there's plenty of examples of those that tried and failed. I hope we'll not be among them.
Yeah, it's certainly one to keep an eye on for sure. The casino unit performed well, Slot Matrix, the platform units all performed very well last year, but one notable, I think the term was unsatisfactory, was the affiliate division. Why did you label that performance as unsatisfactory, and I guess what is the plan to turn that unit around?
Yeah, you might consider me a little bit harsh to put that word on it, but yes, I cannot be satisfied. It's not so much the fact that we're loss making. This is acceptable. We make investments in various areas. I mentioned live dealer. We are massively loss making. This is not really the issue. So what I'm not happy with our affiliate business is the fact that we don't have the proper growth on the revenue side. And this comes back to low churn and signing clients, of course, and helping them grow, as we do in all the other areas of our business. So this is really where we are failing right now in this area. Thankfully for us as a company, it's a quite small part. It's a single-digit percentage of our revenues come from this area. So, it's a little bit unfair maybe to throw so much light on a fairly small part of our business. But yeah, we must do better. And yeah, I'll be working with our management in this division to turn it around. I see no reason for why we cannot. But yeah, it takes determination and investments for us to do that. We maybe had a bit of too much turbulence there. What we did was, you mentioned FSB earlier in acquisition. Well, we did a similar acquisition, somewhat smaller, but what we did in the affiliate area. But what we did there was we actually kept the technology, the team, and wanted to build it onto our own, which is exactly what we didn't do with the horse racing, where we rebuilt. And so this merging of teams and merging of technology is really quite difficult. And I have renewed respect for anyone that can pull that off. And certainly in this one area so far, we haven't pulled it off.
I wanted to continue to look forward now, and one thing that EveryMatrix is really focusing on, and we've touched on it a little bit already, is that sort of big ticket, tier one, turnkey sort of client base that you're targeting now. How did you decide on that sort of shift in strategy, and what does that look like moving forward?
The key realization came from trying the alternative and seeing that it performed miserably.
Sure.
We have tried to sign startups and cater for the small operators. It's not a viable strategy. These operators either die or they get gobbled up by larger operators. In the end, you lose the client one way or the other. If you want, as a B2B provider, to have success, long-term success, you need a client base that will be there not only next year, but for decades to come. We focused henceforth a lot on tier ones. We focused on lotteries. We managed to sign quite a few lotteries across Europe as clients today, and we've proven that we can do this. These are harder clients to win. They are harder clients to satisfy. They are, in some cases, harder clients to work with. Can be stuffy and bureaucratic and so on. But they are also stable. They are also clients with lots of potential. They're clients that you can help really grow. You can give them, let's say, a spark of entrepreneurship and inject a little bit into this and see some returns on this. So this is why we decided on it, and we are trying really quite hard to be diligent in observing this credo. It's not always so easy to turn away from another opportunity, but yes, we're doing it, and it's paying off.
And finally, just one final look forward. If we were to sit down again in around 12 months' time and do this again, what would you expect us to be talking about? Where do you see EveryMatrix in the next 12 months?
Ideally, I would like to rattle off 5 more big deals similar to the Sky City deal we announced with today's press release and quarter report. This is the type of deal we would like to see, and I believe we're capable of doing this and more. It's a deal that for us opens up a complete new territory. We have no activity in Australia, New Zealand, or anywhere in this region. So for us, we break new ground for us. We work with a very solid and very powerful local player. Can I mimic this in other areas? This is really what I would like to tell you about in 12 months from now. Yeah.
Excellent. Ebbe, thank you very much for your time. It's great to chat as always.
Likewise.